Tron TRX Price Prediction 2026 Full Analytics Breakdown. In the midst of the crypto market focusing on layer 2 or new technology narratives, there is a silent giant called Tron TRX that is quietly accumulating to prepare for a full-scale boom in 2026. To help you not miss this wave of cash flow movements or fall into blind FOMO traps, today's video features an in-depth analysis of the Crypto Radar Data Model S full analytics breakdown. Together, we will dissect the full spectrum from the actual position and stage of Tron at the present time to the core macro triggers that are likely to trigger strong growth momentum for TRX next year. In particular, the greatest value you get after this video is a sharp investment roadmap with 3 detailed valuation scenarios: caution, boom, and extreme. These 3 scenarios will act as a strategic compass, helping you clearly understand all opportunities and risks, thereby proactively allocating capital and optimizing the most accurate profit-taking point in 2026. Let us explore the video now. Crypto Radar. On the surface, Tron may look like an old crypto project that passed the hype years ago, but when it comes to unearthing on-chain data and actual cash flows in 2026, the story is completely different. Tron is no longer at the stage of speculation-driven growth, but has moved into a very clear phase of utility-driven network with stablecoin dominance. Currently, Tron is handling around 85 to 86 billion USDT circulating supply, accounting for nearly 46 to 50% of the total USDT market, making it the largest stablecoin payment layer in the crypto ecosystem, surpassing many other L1 and L2 competitors in terms of actual volume used. What's important here is not just the numbers, but the cash flow structure. Tron is settling approximately 2 trillion USDT per quarter, equivalent to billions of retail transactions and cross-border transfers per day, rather than just short-term speculative capital flows. One extremely important point is network economics. Tron generates about $80 million plus protocol fees per quarter and processes more than 900 million plus transactions in Q1 2026 alone, showing that this is no longer an idle chain, but a payment system that operates continuously on a global scale. When combined with the low fee mechanism and burn/energy model, TRX is no longer just a speculative token, but begins to take on the characteristics of a utility plus cash flow linked asset. However, upon further analysis, Tron coin has not yet entered the stage of full institutional repricing. TVL is around $26 billion, and the DeFi ecosystem is still relatively focused on lending and stablecoin primitives, while the extension to the complex DeFi or innovation layer is still limited. This creates a very characteristic state: extreme adoption but disproportionate narrative expansion. So it is possible to position Tron at 2026 as follows: no longer early stage L1, not fully re-rated institutional asset, is in the late utility expansion phase. In other words, the market is valuing Tron as an important stablecoin rail, but it doesn't fully reflect the value of a network that handles trillions of dollars in cash flow every quarter. And it is this mismatch between true usage versus valuation narrative that creates the biggest question for the sequel. Has TRX fully reflected value, or is there still a revaluation cycle ahead? And if this is indeed the stage where Tron tokens have entered the utility-driven phase, where the value comes not from hype, but from stablecoin cash flows, transaction fees, and actual usage, then the next question is much more important. What could completely change the trajectory of TRX analysis growth in 2026, and what are the catalysts? Is it powerful enough to turn a network that runs trillions of dollars of cash flow every year into a market-wide revaluation story? Let's continue our analysis. If you look at the current picture, Tron is no longer simply a blockchain defined by technology stories or hype cycles as before, but has become a global stablecoin payment infrastructure where cash flows actually move every day at the scale of tens of billions of dollars. With about 85 to 86 billion USDT circulating on the network, or nearly half of the total USDT supply, Tron Analysis currently holds an almost dominant position in the stablecoin settlement space, surpassing many major competitors in terms of actual usage. The biggest catalyst for TRX crypto in 2026 still revolves around the expansion of stablecoin adoption. Stablecoins are no longer just a tool for crypto trading, but have become a form of on-chain USD that caters to three main needs: asset storage in high inflation economies, cross-border money transfers, and payments between exchanges. In that context, Tron is acting as a low-cost settlement layer, where high-speed and ultra-low-cost become core competitive advantages, helping it maintain its leadership position in global USDT flows. In parallel, Tron's economic model is also a key factor that creates long-term upward pressure on TRX. As the network processes hundreds of millions of transactions per quarter, transaction fees are generated continuously, and some of them are burned directly, reducing the TRX supply over time. Meanwhile, demand for the network continues to grow thanks to stablecoin activity. The combination of increased demand and decreased supply creates a long-term cumulative economic structure, rather than relying solely on short-term speculation cycles like many other altcoins. Another factor that cannot be ignored is the change in regulatory environment and the level of market acceptance for Tron. In the last few years, Tron has started to become more involved in cash flow monitoring mechanisms and blockchain analytics organizations, showing the trend of institutional compliance. This not only helps to reduce systemic risk, but also opens up the possibility of TRX being able to access larger capital flows if the regulatory environment becomes clearer in the future. However, competition is still a significant pressure factor. Ecosystems such as Tron, with its advantage from Telegram, Solana with its speed and payment ecosystem, or BNB Chain with its position from centralized exchanges, are all looking to expand into the stablecoin settlement sector. Still, Tron holds a years-long lead in building USDT liquidity, and in the stablecoin market, where network effects and liquidity are critical, this advantage is not easily displaced in the short term. Collectively, the crypto price in 2026 is in a very special position, no longer a speculative project, but has not been completely revalued in accordance with the role of financial infrastructure that it is playing. And when we understand the overall picture of Tron in 2026, a network that is no longer valued solely by narrative but by real stablecoin cash flow, by the trillions of dollars of volume it runs every year, and by the mechanism of continuous supply reductions from transaction fees, the most important question is no longer whether TRX is worth it, but whether the market will value it. What will TRX be when all of these factors start to be fully reflected in the price, from the scenario to the extreme boom scenario in 2026? Let us find out the answer in the next part. As of 2026, TRX is trading around the 0.30 to 0.30 medium-term accumulation structure, following strong upticks from the 2023 to 2025 cycle. It is worth noting that despite the strong crypto market volatility, TRX has maintained a long-term upward trend thanks to stable stablecoin flow and unabated on-chain usage. Some current market analysis models are also placing the 2026 moving average price zone of TRX around $0.32 to $0.40, reflecting a steady growth asset rather than a pure speculative coin. In the cautious scenario, TRX continues to maintain its role as the stablecoin settlement layer, but without significant ecosystem expansion or new institutional cash flow. USDT still holds a large position on Tron, but the growth rate slows as the stablecoin market enters a period of relative saturation. In this case, the TRX price mainly follows linear growth based on network fees and fundamental burn. This means that TRX can fluctuate in the $0.30 to $0.45 zone, which in crypto price prediction reflects an asset that has stable utility but has not been strongly re-rated by the market. The more positive scenario begins as stablecoin adoption continues to expand sharply, especially in emerging markets where Tron is holding the advantage of low fees and transaction speed. Currently, Tron is handling over $80 to $85 billion USDT supply, accounting for nearly half of the total USDT supply across the market, along with trillions of dollars in volume settlement per year. If this trend continues in 2026 to 2027, TRX will enter a re-rating phase where the market will begin to revalue tokens not only as transaction fees, but as part of the global stablecoin financial infrastructure. In this scenario, TRX could expand to the 0.50 to 0.80 region, especially if accompanied by factors such as expanded institutional access, larger capital flow listings, or a sharp increase in cross-border payments. In an extreme scenario, TRX price is no longer valued as a conventional infrastructure altcoin, but becomes a true financial settlement asset in the crypto ecosystem. This will only happen if three factors converge. Stablecoins continue to grow strongly. Tron maintains a dominant position of nearly 50% of the USDT supply, and the market starts pricing Tron as a financial infrastructure layer instead of an individual blockchain. In this case, the combined effect of increased demand and decreased supply from the burn mechanism can produce a much stronger revaluation phase than in previous cycles. TRX can enter the 0.80 to 1.20 USD plus zone, but this is a scenario that is highly dependent on macro liquidity and wider financial market acceptance. Despite possessing impressive on-chain metrics and a dominant position in terms of revenue, Tron TRX has never been an entirely risk-free bet, and you must maintain a cold head before allocating your capital. The greatest threat to Justin Sun's ecosystem is centralization risk and the regulatory pressure interconnected with the USDT stablecoin. Keep in mind that over 98% of the cash flow value on the Tron network relies on Tether USDT. Any stringent scrutiny from US regulatory agencies targeting Tether or large-scale asset freezing orders coordinated with OFAC, such as the recent freezes involving hundreds of millions of dollars, could trigger a psychological shockwave that spills over to TRX. Although the prolonged lawsuits between the SEC and Tron have seen significant cooling down settlements, the risks from unexpected legal maneuvers remain a ghost always ready to trigger a liquidity flight at any moment. Furthermore, the robust rise of Layer 2 solutions offering increasingly cheaper fees and higher decentralization is also posing an immense competitive pressure on Tron's niche market. The core point to understand is that the Tron price is no longer a hype-based short-term asset, but is acting as a token tied to real cash flow. That makes valuing it in 2026 no longer a simple pump or dump, but a problem of how willing the market is to re-rate an infrastructure that is handling trillions of dollars of stablecoins every year. Key catalysts from stablecoin expansion, institutional flow to regulatory clarity and market competition could all set the stage for a dramatic revaluation in 2026. When placing TRX in three scenarios, conservative, bullish, and extreme, we realized that the current price may not yet fully reflect the actual potential of the token, and opportunities remain open for investors who understand stablecoins, adoption networks, and supply reduction mechanisms. If you're looking to track and evaluate Tron, keep in mind that this is not just a price story, but a story of real cash flow, long-term adoption, and global crypto infrastructure. Therefore, the core advice for you right now is not to blindly FOMO into green candles, but to invest using a strict capital management strategy. If you believe in the bullish scenario for TRX based on its real revenue, prioritize a dollar cost averaging strategy at solid technical support levels, like the 0.31 to 0.32 range, instead of chasing the price when it is pumping vertically. Never all in your entire portfolio into a single coin with such high ecosystem dependency like TRX. Don't forget to like, share, and subscribe to keep up with the latest analytics, crypto price predictions, and let us know in the comments which scenario of TRX 2026 is most likely. Goodbye and see you in the following videos.